Good evening, all the joinees. Thank you for joining in. I welcome you all to the NGEN Markets webinar. We would be beginning shortly. By the time the others join in, let's have a look at today's webinar topic. So today we would be focusing on a single fund analysis. We would be viewing how to compare the performance of a single fund along with its category average, and at the same time how to compare the performance of a specific fund with its peer. What we have on the platform is basically engine fund score, which tells you on 0 to 10 as a scale, how does the fund perform in terms of its risk and returns as a parameter, as well as on the basis of AUM as well. Next, we would be focusing on the asset allocation of the fund and the holding analysis, which all are the new holdings or new positions that has been brought into that specific fund as on the latest date. Next, we would be looking at the rolling analysis and the drawdown analysis. Rolling returns basically telling us how the fund has performed, the consistency of the funds in the rolling window. On a fund level, what we could locate is 3 rolling windows. Simultaneously, you can view the consistency in terms of performance of a fund for 3 rolling windows. Next, the drawdown tab, which would let you know how the fund has recovered from any loss in terms of its NAV movement, how quickly did it recover from that loss. And finally, we would be locating how to create a specific scenario of your choice so that you could share it across with your client to just suggest how the fund performed in that scenario. Lastly, the forum would be open for a Q&A session. You can either type down your question in the chat box or unmute yourself and ask your questions. So let us begin. This is our NGEN Markets platform, wherein the landing page is the Markets tab. Now, for the topic related webinar, I move to the Funds tab. So the tab opens up in the Funds tab is basically the screener tab, which we mention as a specific screener section wherein you could filter out funds based on your filter parameters. So I'll just click on filter categories as an option, and a tab or rather a page opens up which shows you 4 bucket: equity, debt, hybrid, and others. These are basically the asset classes. Now, let's say in order to go forward with the single fund analysis, I'll select FlexiCap as a category, and the 39 FlexiCap funds would show up onto the screener section. Now, let's say I just click on Parag Parikh FlexiCap to do a single fund analysis of this. And in a new page, you would be able to see the detailed analysis of Parag Parikh FlexiCap. What you could see is the benchmark section, as I mentioned, how we could compare the performance of this fund with its custom category average. So for that, I go to this benchmark section. Here, I just click on this engine as a tab. Here, you have an option to type in the SEBI category average. So since this is a FlexiCap fund, I would input FlexiCap as a category average being my benchmark. Now, the benchmark has rather changed to FlexiCap funds, which is the category average. And currently, we are performing the comparing the performance of the funds. Let's say I just want to run the analysis or rather compare the performance of Parag Parikh with its category average for the last 5 years. So the option to change the start date is right here. The first box that you could see, I'll just click on this change as an option, and there's an option 5 years ago. I'll click on that, and the start date has been automatically picked up as 7th May 2019, and the end date being yesterday's date, meaning the last trading day. Now, as of now, the statistical data that we are able to see on the screen, the performance of the fund, is basically showing the performance of the fund against the category average as a benchmark for the last 5 years, the time period that I have set in. Now, what we could see on this line graph is the blue line and the black line. Blue line showing the performance of my fund, and the black line showing the performance of the category average, clearly stating an outperformance by the fund against the category average in this time duration of 5 years that we have set in. That could also be seen in terms of its blue peaks, the cumulative outperformance. You could see the blue peaks suggesting an outperformance by the fund against the category average as a benchmark. Now, this could also be seen in terms of numerical figures as well. Cumulative return, meaning the absolute returns for these funds, as well as that of the benchmark. You could see it is 183 percentage for Parag Parekh and 126 percentage for the benchmark, which is a category average, clearly stating an outperformance by the fund in terms when you compare it with that of the benchmark. Now, what was the risk that was undertaken by both the fund and the benchmark to generate their respective returns? I'll come right here, the annual volatility, which is basically the standard deviation. What we could see is 14% is the risk taken up by Parag Parekh, while 16% is the risk taken up by the category average, which is my benchmark. So you could say that your fund generated a better level of return with a lower level of risk in this time duration of 5 years that we are analyzing. And we could also see that in terms of its Sharpe ratio, which basically suggests you the risk adjusted returns. You can see it is higher for the fund, 1.02%, while for the benchmark, it is 0.62%, suggesting that there has been a better risk adjusted performance by the fund in when you compare it with that of the category average. Next, what we could see is this cumulative excess on benchmark, which is basically alpha. You could see 57% basically due to outperformance by my fund against the benchmark. This is basically calculated by subtracting the return of the fund with that of the benchmark. And that is how we arrive at this 57.22%. Next, what we could locate are the capture ratios on a fund level. Now, these capture ratios are also available on a portfolio level. Right now, we are focusing it on a fund level. So, up capture ratio tells us that when the benchmark was in a bull run, how quickly did my fund try to catch up with the benchmark's movement? Now, what you could see right here is this 93 percentage. And how did we arrive at this? I just click on this I button. So here are the months that we record. What we do is basically we consider only those months wherein the benchmark has generated a positive return, irrespective of whether the fund generated a positive or a negative return. So right here, you could locate in the month of October 2020, the benchmark generated a positive return of 2.31, while my fund generated a negative return of minus 1.03 percentage, because we consider or rather give preference to the benchmark return, which is positive. Once we consider all these months, you could see the returns that has been generated by the benchmark was 57 percentage, while the returns generated by my fund was 54 percentage. So you could see that when the benchmark was in an up run, your portfolio was not able to catch up with the benchmark return. And that is the reason the up capture ratio is rather 93 percentage. Now, how did we arrive at this 93 percentage? It is simply division of this fund return with that of the benchmark return. Now we can clearly see that when the benchmark was in an up run, the fund was not able to catch up with the benchmark. And so it is 93, meaning it is less than 100. So we consider the performance of the benchmark to be 100 and we say higher the up capture ratio, meaning higher than 100, the better is the ability of the fund to catch up with the benchmark. Now, totally opposite is the down capture ratio. So here what we do is we record only those months wherein the benchmark generated a negative return, irrespective of whether the fund generated a positive or a negative return, meaning here we give focus only when the benchmark was in a bear run. So similarly, I'll just click on this I button. How did we arrive at the 66 percentage? I'll just click on the I button. And you could see, we, as I mentioned, we only mention those months wherein the benchmark generated a negative return, irrespective of whether the fund generated a positive or a negative return. So here you could see in the month of June 2019, the benchmark generated a negative return of 0.76, while the fund generated a positive return of 0.68. Now here as well, the method to calculate down capture ratio is exactly similar. the returns of the fund, which is right now minus 24.19%, is divided by the returns of the benchmark, which is minus 36%. Now, what does this suggest is that when the benchmark was in a bear run, the benchmark generated a negative return of 36%, while the fund was able to be resilient to the negative movements of the benchmark. At the same moment, the fund was able to generate a negative return of 24%. And that is the reason you could see the upcapture ratio right here, 66%, which is lower in terms when we see that how has the fund being resilient in terms of the down movements when you compare it with that of the benchmark, which is currently the category average. And for here, we also mentioned lower the down capture ratio, better is the resilience of the fund when you compare it to that of the benchmark. And here as well, we consider the benchmark to be 100. Next, what we could see are these monthly statistical chart and yearly statistical chart. So what we could see right here is 61, meaning in this time duration of 5 years that we have mentioned, there has been a total of 61 months, out of which 46 months my fund gave in an up performance, while 15 months Parag Parikh gave in a down performance. Now, in these 46 months, wherein the fund gave in an up performance, the average positive return comes to a total of 3.57%. And in a similar manner, those 15 months wherein my fund generated a negative return, the average negative return comes to a total of minus 3.65%. What you could do using these line graph is you could also locate the best performing months as well as the worst performing months. Now, if I just locate at the worst performing month, it is negative 20%. This is clearly, you could view right here, March 2020. The fund generated negative 20%, which was the worst performance across the time duration of 5 years. And the best performing month, 13.54, it would be right here, April 2020. The fund performed the best in the entire 61 month across. Now, this was the performance of the fund with that of the category average. Now, we also have these peer stat, which tells you how does the fund perform in terms of other fund of the same category. Now, here you could see comparing of Parag Parikh across the entire category of funds. The list of 49 funds is what you could see. And the data that you see in this peer stat is since the inception of each fund. The CAGR data, the Sharpe ratio, these all are since the inception of each fund. Now, what we have on our platform is also this NGEN fund score, which can also be used as a method of comparing funds across its individual category as well. So there's this black tile that you could see next to the name of every fund. So I'll just simply click on that, and it tells you that how did the fund perform when you compare it with the funds of the same category. Now, this is a scoring mechanism on our platform, which is released on a monthly basis. And the score basically ranges from 0 to 10. And more closer it is to 10, we say that the fund's performance is better in its category. Now, the methodology, how do we arrive at this fund score, is also mentioned. So what we do is 10% weightage is given to the AUM of the fund, and the remaining 90% is divided between short, medium, and long-term returns and volatility, meaning the Sharpe ratio. So we distribute 30, 30, 30% to short, medium, and long-term Sharpe ratio. Now, we also given certain consideration to the age of the fund, meaning a younger fund would comparatively have a lower fund score when you compare it with that of an older fund. The basic reason being that the younger fund hasn't proven its performance in the market. Now, this is the list of comparing across only intra-category, meaning you can compare the fund score within category only. So basically, you cannot compare the fund score of a flexi cap fund with that of a small cap fund. It is just not comparable. So in this list of flexi cap fund, it is suggesting that Parag Parikh had generated the best fund score of 8.27%, followed by JM flexi cap and HDFC flexi cap. And as I mentioned, this is released on a monthly basis. Month on month, the fund score would change for every fund. Now, this was the NGEN fund score mechanism. Next, what we have on the platform is this asset allocation tab, which tells you which all are the new positions or the current positions that are there under that specific fund. So in the asset allocation, we are right now in this overview tab. So the overview tab basically tells you the total holdings of that fund. Now, on our NGEN Markets, the update cycle runs from 8th to 13th of the month. As and when the AMC releases the data, we update it on our platform. So you could see the data as of now, what we are viewing is as of 30th April 2024, meaning the data for Parag Parikh has been updated. This is the latest data. And the latest data basically suggests HDFC Bank as a stock, the fund has an exposure to an extent of 8.06%. Now you could see the asset allocation, meaning the split in terms of equity, debt, if any, foreign equity. And you can also have in a detailed view for the same. You can just check on this checkbox and it will show you a detailed view of the asset allocation. Next, what we have is this position changes by month, which tells you in comparison to the previous month, which all are the largest increase or largest decrease, and also which all are the positions that have been added as well as removed. Now you can compare this for the last 24 months. Now, what you could see is 30th April 2024, meaning in comparison to 31st March 2024, what all are the largest increase or largest decrease or the positions that have been added or removed under this specific fund. And this could be viewed for the last 12 months. Now you could see that the largest increase comes in the form of Motilal Oswal. Motilal Oswal Financials. And you can also view in the positions that have been added as well as the positions that have been removed. Next, what we have is positions over time, which tells you on a month-on-month basis, which all are the stocks whose holdings have changed in this specific fund. And this as well can be viewed in for the last 12 months. You could just take this scroller and you can just move towards the right. You can view this for the last 12 months. Now, right here, this data, you can see there are two colors, red as well as green. Now, what does this basically mean is that in comparison to the previous month, if there has been any decrease in terms of the holding, it would show up in red. Now, you could see for ITC, it was 5.17% as on 31st March 2024. Now, this has been reduced to 5.01%. That is the reason it is being shown in red. And in a similar manner, if there has been an increase in terms of the previous month, it would show up in green. So for 31st March 2024, you could see it is 5.19%. And as of 30th April, it has increased to 5.26%. That is the reason it is showing an increase. Now, how you could view this is in terms of percentage as well as in shares in lakhs. So I would first explain what does this percentage mean. So this basically tells you if the increase or decrease in terms of holdings of any of the component has happened due to the movements in terms of the price of that specific stock. So right here for ICICI Bank, you could see it has increased to a total of 5.26% in comparison to the previous month. Now, this could have happened because of the change in price. Now, we could also see this and confirm if there has been also any increase in the purchase of any stock. So I'll just click on this shares in lakhs. So right here, you can see for ICICI Bank as a stock, also the number of shares has also increased, and at the same time, the price of that specific stock has also changed. That is the reason while you're viewing shares in lakhs, it has been increased from 287 to 292 is what we could view. Next, this data, you can also download it in an Excel format as well. Now, this was on the basis of individual security. What we have is also on the basis of sector as well. So there is a toggle button for by security and by sector. Once I click on this by sector, you could see the similar analysis is what we show in comparison to the previous month. How has the increase or decrease happened? And again, this data, you can view it for the last 12 months. You can just use this scroller and move towards the right. Now, here, if I look on a sectoral basis, you can see banks as a sector has an highest increase in comparison to the previous month. From 19.63, it has been increased to a 20%. And this data of increase in terms of sectors, you can have a detailed view in this equity sectors tab. So this would show up top 10 equity sector into which that specific fund has made investment. Right now, as I mentioned, banks being the highest, top 10 is what you could see. You can click on any of the bar graph. So it tells you which all are the stocks under that specific sector that have exposure towards Parag Parikh as a fund. You just click on finance bar graph. So in finance as a sector, these all are the stocks that have exposure towards Parag Parikh. Next, what we move on to is this rolling returns tab. So this tells you the consistency of the funds that you have loaded in. And while analyzing a single fund, what you could see is that by default, there are three rolling windows: 260, 520, and 780. These are the rolling windows that get generated by default, and these are editable anytime. You can just change them. You just multiply the number of years into 260. Meaning, let's say you want to analyze it for the last 5 years, you just multiply 260 into 5, and you just edit this specific column and you click on run. Now you can also see the movements of the fund in terms of its rolling return on this line graph as well. So let's say I just focus on this 260 rolling returns line graph. I'll unselect or rather hide 520 and 780. How do I do that? I simply click on this legend of 520 and 780 rolling. So right now we are focusing on a 260-day rolling window for Parag Parikh as a single fund. Now let's say I just zoom in this specific section and I just hover on the topmost bar graph right here. Just right. So you can see 23rd March 2021, it has been mentioned as 70.19%. And that is the highest return. You can see while you locate this 260-day row, you can see the highest returns was 70.19%. Meaning, if an investor would have invested in this specific fund exactly 260 days prior to the date, just a minute, prior to 23rd March 2021. If an investor would have invested in Parag Parikh exactly 260 days prior to 23rd March 2021, they would have generated the highest level of return, which is 70.19%. And similarly, you could also locate in the lowest return as well, right here, meaning right, you could see the lowest return is minus 8.13%. Meaning if an investor would have invested in Parag Parikh exactly 260 days prior to 17th October 2022, they would have generated the least amount of return, the worst return, which would be minus 8.13%. Now, this, as I mentioned, can be viewed in for multiple rolling windows, which are three rolling windows simultaneously is what you can view. And if you just look at the lowest return for the three rolling windows, 260, 520, and 780, you could see that as the rolling window, or rather the investment period in a specific fund kept on increasing, you could see in a 780-day rolling window, even the lowest return that was generated was a positive 18%, which basically suggests the more you stay invested into a mutual fund, the lowest level of return that would be generated could also be a positive percentage. And we can also view right here. In this case, the lowest return that was generated in a 780-day rolling window was a positive 18%. Now, what you could do using these return ranges that are right below is you could create in return ranges of your own. So here we have an option to select the returns window. Let's say I just focus on 260 as we are analyzing the 260 window only. And as I mentioned, you could create in return ranges of your choice. Now, let's say your client wants to know what is the probability of this fund to generate returns between 10 percentage to maybe a total of hypothetical 30 percentage. I have input thus that return range. And now right here, it is mentioning that 37% of time, Parag Parikh has backtested to generate returns between 10 to 30 percentage in a 260-day rolling window. That is what we are currently focusing on. So you could create in return ranges as per your choice, and you could just show this across with your client, the probability of the fund to generate return in that return range. The next topic for today is this drawdowns tab on a fund level. Now, this is also available on a portfolio level. This being on a fund level, we can view in the top 10 drawdowns that was experienced by the fund, meaning how was the NAV of the fund moving down and how quickly did it recover from that loss. So right here, the highest loss is what we can see on the top, 31 percentage is the loss. Now, what happened was the price of Parag Parikh was 28 rupees. And this price started falling and it reached a price of 19 rupees. So the NAV, meaning the NAV specifically started falling. Now, when did this happen? You could see the start date and the end date, meaning this basically happened during the COVID period, 13th Feb 2020 to 24th March 2020. Now, post this date of end date, which is 24th March 2020, it took a total of 75 days for this fund to recover, meaning 75 days for this fund to cross this start price. Only then we can say that fund has completely recovered from a loss of 31 percentage. And you could also view the date on which the recovery happened. So you can see the recovery happened on 7th July 2020. Now on a fund level, as I mentioned, what you can view is the top 10 drawdowns, which is also visible on a portfolio level. Now you can also view this on a line graph as well. The gray region typically showing the down movement of the NAV, and the white region shows you when the fund was moving up. Next being this scenario analysis, which could help you to create in customized scenarios of your own, and you could share this across with your client as well. So let's say I just click on this add custom scenario and want to see how did the fund perform in an year to date scenario. So I'll give this a name. I'll input the start date as Jan 1, 2024 and the end date as yesterday's date, 9th May. And I'll click on Save Custom Scenario. So my scenario has gotten saved right here, year to date 2024. I'll click on that and it's suggesting me how did the fund performed against the benchmark. And here the benchmark we haven't changed yet. It is still the category average that we are comparing the fund against. So in terms of an year to date time duration, it is suggesting that the fund, the blue line, has outperformed the black line. You can see in the excess return alpha of 2.33 percentage, suggesting that this fund has outperformed the category average. Now, what you could also view on a single fund analysis is this AUM tab. You can just click on this graph icon. It shows you the AUM of this fund across given time duration. And this data, you can also download it in Excel format as well. A CSV download option is available. Next, the reporting options of a single fund is also possible. We have PDFs and PPTs. I would show you a 3-pager PDF. So this is our fund level PDF. You could see in the asset allocation, equity market exposure, basically showing you the split in terms of large, mid, and small cap. Next being the performance chart, which suggests how did the fund performed against the benchmark. Right now, since I had selected in the category average, that is the benchmark that you could see in this fund PDF as well. Monthly statistics as well as the yearly statistics. And the drawdowns and the rolling returns tab. Now, this was a PDF. What we also have is a PPT on a fund level. So this being the fund level PPT, which shows you the exposure, the asset allocation. You could also view in the date as of 30th April 2024, which is the latest data. The equity sector exposure as well as the debt exposure, if there exists any. Next being the sectoral changes. The performance chart, how did the fund perform against the benchmark that we have set in. The rolling returns and the drawdowns tab. And PPTs are editable. You could insert in multiple slides as well into these empty slides. And let's say you just want to highlight a specific scenario. This scenario that I had created, I just want to highlight it. You could simply take in a screenshot of this specific data, and that could be inserted into this empty slide as well. Next, what we have is also this price series that you can download on your end. There's a CSV button. So for the time period that I have set in, I would be able to see the price series and the returns. You can view it from the start date up until the end date. All right, so that is for the topic related webinar. If anyone has any query, they can either write down in the chat box or unmute themselves.
Any questions, please let us know.
Hi.
Hi, please go ahead.
Yeah, just asking that the detail which you have shown there, like drawdowns and comparative returns, better returns, and all that on a fund level, will it be available for all across the category also?
Yeah, you can do this. You mean you want to see the drawdowns for any funds in the category, or you want the?
No, I'm asking that all kind of the PDF which you have created, which carries comparative returns, better returns, alpha generation,
Yeah.
and all these reports. It's you're showing it for Parag Pare.
Yeah.
So
Yeah.
we need to know about that entire category so that for making selection easy, can it be downloaded in Excel sheet for all the funds across these
Yeah,
parameters?
it's in a different form, so it will be available in the compare section. So in the compare section, if you want to add an entire category, it's quite easy to do it. So you can add from here, as you can see on the screen, you can just add a category,
Yeah.
right? And so it's just added. So all the funds will be added to this list. And then here you can, if you're depending on what kind of parameters you want to use, you can go to the drawdowns tab once it's finished loading. And it will give you the drawdowns of all the funds in one place. And obviously there are all the other tabs here, rolling returns, etc., risk versus return, position overlap, all the stuff. So you can see whatever you want to analyze further. So let's
We
check.
need to do the selection in return columns also and benchmark levels. We need to only then we can get that all returns over.
Yeah, so so here you can add as many funds as you like. If you want, you can add benchmarks also. That's also available. You can add an index to this comparison, as well as just the funds. And so just to finish out the first point, we can show you the drawdowns tab here. So let's come back 1 second. Should be coming. So basically, you can download an Excel here. And on the index side on the top there, you can just add an index, any benchmark index that you want. So for example, these are these are flexi cap funds.
Flexi-cap.
Yeah, so you can select whatever index you want to benchmark these funds against. And then there's, various different parameters you can look at in terms of relative returns, how they're doing versus the index, all the funds in the category. And all of this data you can download in Excel. So most of these tabs, they have an Excel download button also.
As well as into that PDF, that presentation also.
Yeah, so we have a PowerPoint download option in the compare section also, but that is currently limited to maximum of 20 securities. So generally speaking, you can slim down this list by going through some of these numbers. Maybe the young funds you can remove.
Yes, got you.
Yeah, and so just because of design issues, we basically keep it down to 20. So
No,
if you
20
have,
is fine.
yeah,
20 is fine, perfectly fine.
yeah, so with 20, you can download an entire comparative PPT, and you can also edit it if you want.
Okay. Thank you.
No problem. Any other questions, please let us know. Okay, looks like there's nothing else, and so we can close for today.
Yes, sir. Thank you all for joining in for today's webinar. You can anytime visit our YouTube page. There would be a dedicated playlist of all the webinars that has been conducted up until last Friday. Today's webinar will also get uploaded. There are a total of 111 videos that have been uploaded. Again, thanking all for joining in. Hope to see you again next week with a new topic. Thank you.